Personal finance presentation. Non-bank financial service providers. Prepare to get financially fit by practicing personal finance. We're continuing on with our discussion of the financial institutions, breaking out those financial institutions into four categories, including deposit institutions we talked about in a prior presentation, non-deposit institutions we talked about in a prior presentation, other financial service providers we'll talk about in a future presentation. Here we're looking now at the category of non-bank financial service providers. So we have non-bank financial service providers, starting off with the retail stores offering prepaid debit cards. So a retail store may offer the prepaid debit cards, and we could see in essence the incentive of the retail stores to be having those prepaid debit cards to incentivize sales that are going to be happening in the future, hopefully for that particular store, and the financial incentives that could be to customers for using the prepaid debit cards. We also have the online banking service providers, online payment service providers like PayPal. PayPal is probably one of the more confusing type of components that have come into the financial services world, which have been huge in facilitating financial transactions. And then we have the P2P or peer-to-peer lending intermediaries, also one that's probably a little bit more confusing for most individuals. So let's start off with the looking at in more detail of the PayPal. So the online payment services like PayPal will have online payment platform that offers individuals and businesses low-cost services. So PayPal has many different services. They're providing more of kind of the normal kind of financial services here as well. But one of the main things they were able to do is increase the ability to facilitate transactions quickly between different individuals and people that have basically their financial institutions, different financial institutions. And it made it transparent and tried to make it in a way that's going to be secure, and that provides a lot of benefit, especially if you're doing transactions that are going to be online type of transactions. So facilitate payments between parties through online transfer. So clearly more and more transactions are being done online through people that have different financial institutions. You would like that to be done in such a way where it's going to be secure, where you can track the transactions and both sides of the transactions feel safe with the transaction and are able to see exactly what's going on, having transparency with it. Allows customers to establish an account on its platform, which is connected to the user's credit card or checking account. So that's going to be the major idea. The platform is going to be connected to one of your major financial institutions, generally for the major purposes and uses of the platform. It could use basically as an intermediary so that you could put some money from your checking account possibly into the PayPal account itself, or act as an intermediary between, say, your bank account or your checking account and the PayPal account, allowing you possibly to receive and to distribute money to others in this online fashion, hopefully in a secure way. So once identification and proof of funds are confirmed, users can begin sending or receiving payments to and from other PayPal accounts online or through the company's app. So then it'll allow you to basically send money in a secure way. It is considered to be a very secure method of sending payments online. So you can send money fairly securely in a secure way and receive money securely online. It may also be used to integrate with other types of resources you might put online if you were to, say, sell things or have a website or something like that where you're making sales. Then you would like some secure way in order to collect on the sales, and PayPal possibly could allow other people to make the payments, and they possibly could allow other people to use their credit card using the PayPal platform to allow you to be able to receive payments. So people that are doing online businesses, then PayPal could be quite useful to facilitate transactions. And even normal people just making day-to-day types of transactions can use resources with PayPal to basically transfer money a lot more easily in an online way. So those types of services are becoming more and more useful in the day-to-day options. Notice that you might use this PayPal yourself if you're doing online business in some way. It's going to be very useful. It's also nice to know that you have the PayPal option, which is one of those sources if you are looking to purchase from other websites, to try to verify the security. What kind of security does their website have? What are they using if you're going to give your credit card to someone on an online website, do they have a secure payment method that you're going to be using from the purchasing side as well? And PayPal is usually going to be a fairly secure method. So then we got the peer-to-peer or P2P lending. That may also be called the social lending or crowd lending. These websites connect borrowers directly with investors. So you can see it's another kind of website, and this is becoming more and more common with website platforms that can be used as a tool to just be kind of the intermediary, the person that makes the connection, or the thing, the entity, the platform that is making the connection between two individuals that want to make a transaction. Clearly, when you have trade or barter that's going to happen in the world, one of the most complex components is just getting the two people together that have the needs that they want in order to be beneficial, to be better off if a trade was to happen. And obviously the online platforms can make that a lot easier to do. They can link up those two people. So that's what we have here with a lending system. These websites connect borrowers directly to lenders. The site sets up the rates and terms and enables the transactions. So it'll try to basically set up the terms and standardize the process as it sets up the borrower and lender. P2P or peer-to-peer lending. Lenders are individual lenders who want to get a better return on their cash savings than a bank savings account or CD. So the lenders are looking to basically get a better return, of course. And the P2P borrowers seek an alternative to traditional banks or a better rate than the banks offer. So if you're borrowing money and you're using the lending platform peer-to-peer, then for whatever reason you believe that you can get a better situation, a better setup using the peer-to-peer lending than the traditional lending platform. So once again, two sides of the transaction. The peer-to-peer lenders, the people that are lending the money, are individual investors who want to get a better return on their cash savings than bank savings or CD offers. And the P2P borrowers, the people that are borrowing the money, seek an alternative to traditional banks or better rate than the banks can offer. Examples of these, and these will change over time. This is another area where there could be changes basically to them over time. So these are just some names. Currently, we got the Proper, we've got the Lending Club, the Pure Form, Upstart, and Street Share.